Why is Japanese whiskey generally more expensive?
Hi everyone, my name is Sam from Whisky Finance Group. Today I have with me Julian from RoomingKos. He's the founder and director of RoomingKos, so I'll let him introduce himself.
Thank you very much, Sam. Really appreciate that. I'm Julian. I'm the director at RoomingKos, and we provide student accommodation and rooming house management services across Melbourne. So thanks again for having me, Sam.
Thank you for being here, Julian. So today we're just gonna have some whiskey, talk about whiskey for a little bit, and probably talk about some finance-related content. Since Julian specializes in rooming houses and short-term accommodation, or you call it build-to-rent market, we'll probably talk about that through the...
Yeah, sounds good to me.
Perfect. All right, so today we have Yamazaki. So this is from Distiller's Range, which essentially means there's no, it's not aged. It's not listed. Now, Japanese whiskey, over the past decade or two, it's really gained its popularity. And I'm sure you've had this before. This is one of your favorite ones, right? I've had it before,
but I am curious about something, Sam. Why is Japanese whiskey generally more expensive?
Look, the Yamazaki, it's a really, from the whiskey point of view, like we know Japanese people, they like perfection. So I would say they've nailed this whiskey from quality point of view. The precision is right. So this one's aged in a Japanese oak. It's got a bit of a sweetness that comes from vanilla, and I think the finish, a bit of a cinnamon finish at the end. So they've done this whiskey very well. But I don't think that's the reason Japanese whiskey is expensive. I think it comes down to the supply of it. The Japanese whiskey is not able to meet its demand. And you look back 10 years ago, this whiskey was probably a lot cheaper than what it is now. And over the time, because the demand has gone up and the supply hasn't really increased all that much, so less supply, more demand, obviously the price is going to go up.
Fair enough.
Do I think it's a great whiskey? Absolutely. Do I think it's worth the money that you spend on it? I don't know. Because for what you spend on a Japanese whiskey, I think you can get a lot better whiskey from Islay even maybe. Australian whiskey is a good example of really top-notch whiskey. And if you look at some of the Australian whiskey, that is being deemed number one in the world, and they're like $1,200 a bottle.
So why did you choose this bottle in particular for today?
Look, just to start, I think this really ties into our conversation in the build-to-rent market. So,
does it?
Yeah, supply demand, right? So why is build-to-rent market doing so well? I think a lot of that is because of the supply of investment or rental properties. So you look at the property market right now, especially in the rental space, the vacancy rate is so low. It's close to, when it gets to below 1 vacancy rate, it means that there isn't enough property for the renters. And where you have a short supply, and we do have population growth happening at the moment, which you're probably aware of it as well, being in the market, that's going to push the prices up, right?
Sure.
And so you're in sort of student accommodation area at the moment. What are you seeing overall in the market in Melbourne?
Right. Well, firstly, it's exactly what you said. The earth is not getting any bigger. There's no new land coming. And with the population growth happening at the moment, a lot of the popular areas that our company operates in, like Clayton, Caulfield, is incredibly dense at the moment. And with that being said, our occupancies are always super high. I think the issue now is how do we get more accessible stock? I think people are all competing for the same areas. They're competing for the convenient locations. And what's cool about our company is we're the only company that actually manages both rooming houses and both student accommodation. And even with both types of assets, Sam, what we notice is that our occupancies are generally always above 95% plus. And that's because, like what you said, the population growth at the moment. And I think at RoomingKos, we're trying to focus on how do we make rooming and renting more accessible for everyone. And that's not just for students and working professionals, but it's also for local residents in Australia as well.
So you keep sort of talking about rooming houses and student accommodation. What is the difference between the two?
Well, the difference between the two is that a student accommodation is strictly just for students, whereas a rooming house is accessible to pretty much everyone, which it can be students as well, but we get a lot of working professionals. And I guess the purpose of a purpose-built student accommodation asset is the idea is to have all your students live there so that these students aren't competing for normal residential properties that will pretty much open up more access for first home buyers and people who actually want to own or occupy those properties. That's why by providing student accommodations, that will definitely help in terms of accessible housing for everyone. And in terms of the rooming house side is also, it's like a student accommodation, but on a smaller scale, which any common investor would be able to kind of invest in. And I think after working with you for how many years, Sam, we've been able to introduce a lot of clients to you as well, and you've been able to help fund a lot of rooming house projects.
Yeah, and look, I have definitely seen a bit more
Sorry,
interest.
Sam, are we going to sip this or what?
Oh, yes.
Are we saving
We forgot,
this?
right? Okay, let's have a taste of it.
Cheers.
Right, cheers.
Oh, it's always smooth.
Yeah, and precision. I think
Yeah,
that's the Japanese style, right?
always smooth.
And you're right. Look, over the last, I think, 4 or 5 years, the interest in rooming houses has been great, especially around the Clayton sort of area and surrounding suburbs. I think the entry point is an interesting one. So student accommodation versus rooming houses. I think rooming houses are definitely a lot more accessible for investors. And I'm talking investors who may not necessarily have access to $3, $4, $5 million, right? So where sort of you have access to that sort of money, am I right in saying student accommodation provides a better yield than rooming house over long term?
I would say it's definitely similar, but it always depends what type of asset you're building, what your budget is, what the service offerings are. But it could be similar. But yeah, it is a lot more accessible to do rooming houses.
So with the rent that some of the rooming houses are asking at the moment, in surface it looks a lot expensive. Like in Clayton, I've seen one bedroom being rented for $400-$500 a week. So why would a student go and get a rooming house instead of getting a normal house that could be $700 per week?
That's a very good question, and this is one that I'm answering on a daily basis. But the reason why people don't go off and, I mean, students in particular will not go rent a house is because, one, they can't. Most of these students have no rental history. It's very hard for them to compete with, locals. And then secondly, if they were to rent out an entire house, say they were able to get it, they would need to sublease the rest of the rooms. That's one task. And on top of that, you've got to furnish it. Most students come here, they don't have the SIM card yet, they don't know where the nearest IKEA is, and if they do find IKEA, they've got no idea how to furnish it. At least in a rooming house, in a student accommodation, we give you your keys, you've already got your bed, you've already got your mattress, you've got everything, like all the bills, utilities, including Wi-Fi is all already covered. So it's like you're moving into a long-term hotel almost. And for a lot of our younger students, that's the perfect setup for them. They don't have to worry about anything else and focus on the main thing why they're here, which is studying. And it's the same thing for working professionals as well. Sometimes you don't want to think about furnishing the property, finding people to sublease with. So a rooming house is beneficial in so many ways.
So really it's about the convenience more so than the cost.
100%. I mean, when you're funding a lot of rooming house clients, Sam, I mean, what do they look for? Do they mention these things to you?
So I'm probably on the other side of the scale here. Like I'm dealing more with investors, right? So from investors' point of view, they're always going to look at the return. And some of the rooming houses I'm seeing, they have a yield of 10%, a gross yield of 10% or over.
I've seen more. I've seen higher.
There you go. And compare that to a traditional rental where you're getting 2 or 3%. So from a gearing point of view, if you want to have negative gearing, then normal houses is probably great. But if you want to have positive cash flow, these rooming houses are going to always give you a better return, positive cash flow, and in many extent easier to borrow against as well. So especially if you buy something that is already been operated as a rooming house, there's 10% yield, your interest is 6%, so you're cash flow positive in that sense. And from the bank's point of view, they look at the property as security. They may not be able to give you 80% as normal residential, but if you have a bit of a backing in the equity on your other properties, if you want to boost cash flow, like financially, I think it's definitely a good investment for long term.
100%, yeah. And can I ask you something, Sam? What type of investor is coming to you asking about rooming houses? Are they more so like young investors, or are these more so passive investors who are higher in age?
I think it's a bit of a mix at the moment. I have young professionals who are wanting to get into that industry. I have real estate agents who are wanting to diversify their income. I have mum and dad investors who've had investment portfolios. I've got professionals like you as well who operate and own rooming houses. Look, I'm looking at doing one myself as well. So I think it's a bit of a trend at the moment, definitely led by the demand for it. The longevity, that's something that probably needs to be tested a little bit. But I think the comfort, like to me, is the rooming house has been around for ages, right? And it's probably been around for 20, 30 years now. It probably has not, from the quality point of view, it's definitely changed from 20 years ago. I think the regulations means that the quality of the rooms or the quality of the house you're providing is a lot better. And I wonder if that is also a reason why it is attractive for tenants as well. And, like I said before, if someone's coming from overseas, it is pretty hard to know your way around Melbourne and how things work in Australia. If you're applying for a rental property in your first couple of weeks of being in Australia, there's no way anyone's going to rent you their house. So you guys provide a really good service in that sense, linking up the investors who are looking for high return to students or young professionals who are looking for easy and convenient locations. So I think the recipe is there for this to keep going, but it is going to come down to how the property market is going to perform though, isn't it? So
100%. And I also want to add one more thing as well. You said rooming houses were around for 20, 30 years. I think one thing that I want a lot of people to understand is that rooming houses, the way that they're perceived 20, 30 years ago is not how they're perceived now. It's very different. I think there are a lot of people who still think rooming houses are designed for people who live rough, maybe homeless people, maybe people who are, substance abusers. But if you look at rooming houses now and the standards that they have now, it's really designed. I mean, I'll speak for my own properties, but a lot of our products now are designed very well that even I or even you, if you want to take a room one night, it's really nice. Like our rooms have en suites, split air conditioning. A lot of them have kitchenettes, so you're almost getting like a studio apartment. So in terms of like the perception of rooming houses is something that I want investors to also understand. They're very easy to run, especially when you have a management company like RoomingKos as well. So yeah.
So let's come back to the property market a little bit here, right? So at the moment, sort of, we're in that circumstance where property market's starting to trend up. And with recent interest rate cuts, that trend's probably going to continue. I think there's been forecasts of maybe 15 to 20% increase over the next couple of years in the rental in property market. So would that mean for investors they may be looking at more rental income because they're paying more for the properties, right? So do you see the demand in the student accommodation or rooming houses to keep increasing to keep up with the investor expectation?
I definitely think there will be an increase. In terms of the rate of increase, I think there will be a lot more stabilization compared to what we experienced since COVID.
Yeah.
So if you looked at between now and COVID, the rental increases were quite a lot. I think when the borders opened for students to return, and I think it really is testament to Victoria being the education city, that because all the students came back, rental increases became very unstable. So rentals would increase by a lot. But I think over at least the next 5 to 10 years, that because the built to rent market at the moment is very hot, a lot more investors are looking into it, I do think it will stabilize. I mean, what do you think, Sam? What's your opinion on that?
Look, I kind of agree with you, but look, I'll probably take a different approach here. On a broader property sort of market, we'll keep seeing the uplift in the property value. That's for sure, especially now that the interest rates are coming down, and that will fuel it a little bit more. I think it's primarily driven by the population growth in Victoria. So if you look at the last, I think 10, 15 years, Victorian population has increased significantly. I think something like 8 million people. Now, if you look at the student numbers that are coming in, that's quite high as well. I know there has been some discussion about capping the student limits. I think it's happening a bit subtly at the moment through the visa. I'm not sure if they actually cap the student numbers. This year, I think the number of students, especially this semester, it feels like it's slightly lower than the last year.
Mm-hmm.
Like you would actually know about this, right?
Mm-hmm.
So
yeah.
Did you notice a bit of a slowdown in student numbers?
Absolutely. And it's not just generally the amount of students coming in, but it's also the difficulty of students being able to enter the country. Visas have become really expensive. The application process has taken a lot longer. It's really slowed things down. And I think that's because of the student cap. And as a result of that, I think the government has, from their observation, it's definitely not great. From an economical perspective, it's not great if you can't bring students in here, because look at the universities that are laying off so many employees, you know. So with that being said, I'm pretty sure the government has already increase the cap for next year to bring more students back in, and I think that will continue to increase over the years, because if Victoria is the education state of Australia, that's something that we should champion and we should promote, and that we should continue to support. And I think if that really is the case, more student accommodations should be developed, sustainable housing for those students to feel comfortable and to feel safe and to be able to focus on their education. I think purpose-built student accommodation would answer that.
Yeah. And housing by itself has been a bit of a challenge for Victoria. The population growth is happening, and I don't think we are building enough, or not that I think, like I know that we're not building enough to cater that population growth. So I think the last couple of years there were about 55,000 approval for housing development. This includes the apartment style properties, multi-dwellings and single dwellings as well. Only a bit over 30,000 were actually commenced. Now that's going to take a while to complete as well, right? And you look at the construction industry itself, the cost of labor and cost of materials have gone up quite a bit. Definitely discouraging investors and developers to build more. Add on top of that the red tape, the regulatory changes, the constraint from the approval point of view. That's definitely slowed down the supply side. So less and less properties are being built. So what that would generally mean is, you've got the less supply coming in, demands going up, internal population growth and migration. It's a recipe to fuel the property market. And when sort of normal property or normal rental become less available, families may be willing to pay a little bit more to rent a normal house, but single adults, young professionals, rooming student houses could be the most convenient and easy option.
Yeah, 100%. I have a question for you, Sam. In terms of your rooming house and student accommodation investors, what's the hardest part for you? Is it getting funding for the construction? What's the hardest part of the process?
It's slightly different way to approach these projects than you're traditionally buying a property. So from a lending point of view, I think the structure becomes very important. And what you buy needs to be based on where you are in terms of your financial circumstance, right? Now, as an example, if someone has a strong asset backing, may not have the amount of income needed to buy a rooming house or develop a rooming house, they can enter the market by buying an existing rooming house. So from equity point of view, so the rooming houses, generally banks would lend 50 to 60%. And that's probably the big difference between buying a traditional investment property where you can lend up to 80%. So the initial investment, whether it's cash or equity, that is significant. You look at Clayton, rooming houses may be selling for around $2.4, $2.5 million, depending on what type. To buy something at $2.5 million, you probably need at least $1 million of cash. And not everyone would have the $1 million in cash, right? Mm-hmm. Now, for people who do, that's a perfect investment because you've got established rental income already, and that's going to boost your borrowing capacity to borrow the $1.5 million you need.
If it's a turnkey property, like a rooming house that's got its permits already rented, does that fall under a commercial loan or does that fall under residential?
It will fall under commercial loan.
Does that mean less leverage?
Equity-wise, you need more, and yes, leverage is less. So LVR, the normal banks would be willing to lend maybe limited to 50 or 60%, depending on the quality of the property. A lot of people do also buy a normal property and convert, right? And the challenge there is it may be fine to buy a normal property at 80% LVR, but where are they going to get funding for construction? You've done a project in the last couple of years, and you bought a normal residential property and you converted. And you probably saw the cash you needed was on top of the bank loan you already have, right? And did you find that process confusing, harder than when you would have bought your home?
I would say it was definitely a lot more steps, but in terms of actually making sure that the funding is right and making sure that we can hit that timeline, it's just to make sure that you have the plan right from the beginning. So even before if you know that you're going to renovate the property and convert it into a rooming house, make sure you've allowed enough time, make sure you've calculated the holding costs, make sure that you can actually carry the project. And on top of that, make sure you've got a finance person who can help you with this process, which you helped us quite a lot in terms of forecasting and in terms of planning as well. I think that definitely makes your life easy because there are quite a few costs that you have to consider. But once you've got that planned out, it's pretty straightforward. If it were up to me, I would prefer to develop my own property rather than buying a turnkey one.
And it could be right for your circumstance, but some people may not have that option, right? Look, if you develop it yourself, you definitely gain more value. It's like any property. So you buy a land and you build a house. It's going to be cheaper than for you to buy that house if someone else built for you. The same strategy here as well. It depends on your circumstance. Now, from funding point of view, I think sort of being organized at the very start is the key, like knowing exactly what you're going to do, exactly what you're going to spend. Obviously, you'll work with architects, finance brokers, and banks all together. If you can position yourself right at the very start and plan everything out, that's definitely making things easier. Rather than going and buying a property, now you think about, okay, where's the money coming from for construction? It does happen. Look, most people who want to get into rooming house, and I've helped quite a few number of connections to get into that rooming house student accommodation market, and most of them are pretty organized, and they do take advice and do the right steps and structure it the right way. But I've also come about clients who haven't thought about long-term what's involved and actually buying the property. And some of them could be stuck now because they can't get funding from the bank for construction. Because the type of construction for rooming houses is probably a little bit different than residential, but it also is different than commercial. So it's kind of in between, and not many builders are doing that sort of project as well. Valuation during construction becomes really really big headache sometimes. It is definitely about planning. Yeah. I think planning what you're going to do from design point of view, involving the right people, involving RoomingKos, involving architects and broker, to get the process mapped out before you even start. That's definitely the right way.
100% agree, yeah. And then also touching on your point in terms of buying already established rooming houses, that even with the ones that are already established, you will save on the permit process because it's already done. But there's still ways that you can improve the property. There's still ways that we can freshen them up. We can install products that actually add value to the actual property. That can actually increase the rental yield for the owners at the end of the year. And at the same time, there's upgrades that we can do to the property to also make it more efficient to run as well. You can save on cleaning costs, electricity costs. So I think whether you're buying brand new or whether you're building your own, there's always ways that you can improve it.
Yep, absolutely. It is always about adding value. You add more value, you get more value from it, right? Now, coming back to the regulatory side of it, the rooming house operations probably a little bit different to running a normal rental property. And over the last few years, there's been a lot of additional requirements on investment properties. What are you seeing, like the impact of that and the expectation from the landlord translating into the rentals?
In terms of like the planning process, you mean?
In terms of, there's annual checks you need to do.
Yeah,
there's compliance checks. You've got added taxes. How is that translating into the rental?
Look, as an investor, as long as your yield is there, is the important thing. As an operator, yes, it's more work to have to keep up with compliance. It's more work to actually have to make sure that everything is, within regulation. But in saying that, that's something that I actually try to champion, because my family's been doing rooming houses for almost 30 years. And I've seen a lot of things from when my dad first bought properties back in the early 2000s. He would manage it himself. He would do it with cash. And then growing up in that environment, I was able to meet with a lot of other investors, and the way they run their rooming houses is shocking. Collecting cash, no proper contracts, living environments weren't legit. And really, in the grand scheme of things, yes, it's easier to run. It's more inexpensive, but it gives such a bad look for the industry. And also some of the really sad stories that you hear from students getting scammed or getting taken advantage of. It's definitely not nice. So that's why I say at RoomingKos, we only manage properties that are actually licensed and permitted rooming houses. And in terms of that compliance, yes, it's more work, but at the same time, it's a better quality of life for the end user. And it's also less headache for the owners as well, because you've got a product that's run well, that is within regulation, and that you're selling a product that your customers, which is your residents in this situation, would enjoy. It's a lot less headache. If you're going to run it yourself, make sure you run it well. I mean, there's nothing wrong with an owner who wants to run it themselves, but don't take the shortcuts. Make sure you're doing everything correctly. Make sure you're lodging the bonds. Make sure the environment is good. And if it's a rooming house, actually get a permit for it. It's expensive at the start, but in the long term, it will be better for you. Yeah, and then on top of that, Sam, you would get better quality residents as well. If it's legit, you're charging, a proper amount of rent. You will generally get a better quality resident.
Yeah, absolutely.
We've talked quite a bit about, in terms of rooming houses and the tenants, but in terms of the investor's perspective, Sam, what type of, properties and assets are your clients looking at?
It's a bit of a mixed one. There's demand on the commercial side, and it's usually investors that are a bit more sophisticated. They look to get into the commercial property market, and there's advantage of in getting into commercial property, right? And as an example, all of the cost of that building essentially is covered by the tenant. Depending on type of property, you may have to pay land tax if it's on the retail lease. But if it is under normal commercial lease, generally tenant also pays the land tax. So from the net income point of view, what you get is a lot more clear than in the residential. So people get into residential investment more so for capital growth. And they're looking at sort of rooming house and student accommodation. That's more classified as commercial as well, or specialized property. But normal residential property, people would probably look for capital growth. I don't know many investors who are buying a property just so they get rental income. Rental income, I think it's just a byproduct of the process, and normally most people would look for areas where they think there is the best possible capital growth in future. A lot of people are looking at adding value these days, so it is starting to get a little bit harder to get that substantial gain from buying a house on land package, unless you buy a big block of land and you subdivide and you build. Not many people can do that just because of the amount of cash or amount of contributions required. The regulatory environment, our government wants to say that they're supporting construction and they're doing everything they can to build millions of houses in Victoria. But in reality, there's a lot of red tape. I've helped a client who recently completed a 4 townhouse development in Glen Waverley. The challenges he faced from the planning side all the way through to the subdivision side. He swore himself that he's never going to do another development in Victoria again.
What was the problem?
Delays in council, council nitpicking every little small things, and some of them made sense, some of them didn't. And the process of plan of subdivision, this client has to lodge a transfer 3 times for the end to come out as what he needed. Now, I give that there was complexity in the ownership structure, but you shouldn't have to lodge transfers 3 times on one property, right? And the cost associated with it. Again, complexity also determines the cost. So this one's a bit complex. But if we took away all the complexity, still there's quite a bit of cost involved. Contribution tax of 10% of building value or construction value, that's 10% taken off from the margin. If you're doing a big development project, and if you're not owner builder yourself or you are a developer, you're working at a margin of about 20-25%. And another 10% on that, if that's chewing into your margin, if you're investing a few $1 million and you're getting 10-15% margin on taking such a big undertaking, I don't know if the reward actually is good. These construction projects could take 2 years, and if you're getting 15%, that's 7.5% per year. If you put money in a term deposit, like during this time, I think now it's decreased, but you're getting 4.5%. That 4.5% is risk-free. But 7% with risk, I think that's very discouraging. So that would have some impact on people, whether they want to make that big commitment or want to undertake a big construction development. The other thing is the constraint on what you can do with the property in terms of zoning, how big the houses could be on a development or how small the land could be per unit. That also plays a little bit into what the profit margin would be. If you take a land that is 900 square meters, and if you build 3, your profit is going to look so much different than if you were to build 2 or if you were to build 5. And the greater the number is, the planning process becomes a little bit harder, but then you probably have more return because of the scale. Sure. it is hard sort of sometimes to gauge, what that profit number looks like, because people tend to be surprised by what are the fees they need to pay through the process. And it could also be someone not done their due diligence properly, or it could be someone that is experienced property developer generally got surprised by some of the things that got introduced through the process. I think that's probably speaks volume about how the Melbourne market itself is at the moment. There's a lot of regulatory constraint, whether it's a high-rise or even single properties facing a little bit more challenges than they used to 10 years ago. That'll definitely restrict the supply, right? And Melbourne, I think, it's expected to add another 10 million people in the next 20-25 years. We do not have 10 million or even 5 million housing that are planned, or we don't think that that's going to happen. The government say they want to build millions of properties, but you don't see that in practice, right? And from government's point of view, I think whether they build it themselves, which is unlikely, they'll have to encourage or give incentives to developers to do these projects. And you can't create a circumstance where in surface it looks like you're giving incentives, but on the other side, the regulatory requirement, the red tape's really blocking them. And the cost of construction is another thing that's really discouraging to people. To build a house before COVID and now, the cost has probably gone up by 60-70%. So the property prices have not gone up by 60-70% in all areas. In some areas it has. I think it's just a matter of government doing enough to encourage people to invest. Or the introduction of these new taxes, that's definitely not helping.
Mm-hmm. Can I ask you something, Sam, real quick? I mean, given that you've said everything regarding the inflating costs of construction, do you feel like because build to sell developments are a little bit more riskier than they were pre-COVID, do you think that's why there's been such a rise in build to rent assets these days and investors looking for build to rent?
100%. The build to sell strategy, build to rent strategy is completely different, right? So when you're doing a build to sell project, obviously it's yield. You won't think about the yield, you think about the return on your investment. Now, build to rent, you have a longer time period to realize those returns. Now, the rental market is very strong at the moment, so it allows you to recoup those costs over a long time, but the rate of return is probably higher if you're sort of aiming for 10-11% rental yield. And you have that throughout the holding period. So if you held the asset for 5 years, 10% per year, well, that's 50% in 5 years' time. And in that time, the property value may have gone up as well. And build to sell, like your return is what it is. The risky in the sense, you're relying on a builder to build your property, and how many builders have gone bust in the last few years. So there's a lot more risk in that sense. Technically, for that risk, there should be higher return. And I think, with where the interest rate was, the new taxes, the contribution tax, the cost increase for construction labor, I think it's more fruitful for investors to actually think about the build to rent, and could be a reason why it's popular. If you build a building with 100 rooms and compare that to building 100 houses, easily building 100 rooms makes sense because you don't need to invest in 100 blocks of land.
No, definitely agree on that take, and I've experienced it firsthand as well. A lot of people were doing build to sell projects, those same people now are working on build to rent projects with us. So
I wonder if the longevity of it, though. I wonder if it is sustainable. Like normal property market, it keeps ticking along, and it's probably not reliant heavily on international or migration students. So do you think we will come to a situation where we just have too many build-to-rent properties and oversupply?
I don't see so in the near future. Like the statistic that you gave before, that I think you said, was it Melbourne? That was, we have a population increase of 10 million within the next...
Australia.
Australia.
Yep.
I mean, it just goes to show that we are incredibly behind in terms of infrastructure now to be able to accommodate and provide housing to all these people. So I definitely don't think, there will ever be a situation of oversupply. At least not in the next 20 years, in my opinion. If anything, we shouldn't be worrying about that. We should be worrying about how do we actually accommodate all these people, and not just people who are looking to rent or stay in Australia short term, but also Australians like me, like my family, who are born here and looking to purchase their first house. How do we make it more accessible for them? I think that's what we have to figure out. How do we provide housing for everyone, and not just people who are looking to rent, but also owner-occupiers too? Like I said, Sam, the earth is not getting any bigger. We have to develop. It's like what you were saying, pretty much.
And look, you can either go up or go further out, right? Look, Australia is in such a unique position at the moment. We have a vast amount of land, like a very little of Australian land we occupy at the moment. So we're not restricted by availability of the land. We're definitely restricted by how the land is planned. There's a lot of land does get released, and I think the construction cost, development cost, and the red tape definitely is a key hurdle. But in addition to that, you look at the infrastructure spend. There's a big focus on infrastructure spend at the moment, but it's all not limited, but it's all focused in the metro sort of area. You go out, 50 kilometers, which 45 minutes out from Melbourne, you see all this vacant land, but it doesn't have any connections. So Australia can definitely do more in freeing up those land and making property accessible for everyone. Like first home buyers are struggling at the moment to find a property because investors can, offer a little bit more than first home buyers. That's an issue. If there was abundance of properties in the market, the competition would not have been that severe, right? I think government probably needs to look at their strategy very well, not just in the media releases, but into action, the things that they said they will do, actually doing it. Focus more on infrastructure on the outskirts of Melbourne so they could, bring out new suburbs. And it's a bit sad to say, like we've just got so much land that is not utilised, probably not going to get utilised for a long time, while the first home buyers, students, they're struggling to find a property to buy or rent.
Yeah.
The other way is to go high. Now, building a 10-bedroom house or building a 30-bedroom apartment, I think the cost itself is more than 3 times, where the outcome is also 3 times. So easier to spread out than to go up. But if you've got the resources, you could build 10-story building in Clayton, but there's a red tape. You can't do it. So I think it's just need to be balanced and have a long-term view and a plan. The other issue we have is whatever plan the current government has, whether one side or the other, when the government changes, those plan changes as well. So there's no consistency. We had a major infrastructure project lined up, and the government changes, gets cancelled, and something else introduced. So I think there's a lot of wastage there, and just I feel like the resources are not getting directed to the area that's needed. That's probably where it needs to start changing. Unless we have a good change in our system, like government and their strategy, it's pretty hard for you and I or normal investors to change the market. Like we're just going to follow where the market leads, or trying to get into the right area where the market's good, but we can't change the market itself.
Yeah, Yep. I think what you just spoke on just now sounded very doom and gloom for our country. But what are some success stories that you've had from your clients?
Look, in terms of property, I think, look, keep aside this doom and gloom and a lot of working debt from the government. But at the individual, coming back to individual level, people have had great success. The recent development we looked at, the margin was good. Then despite of
Which
all
development
these
is
other
that? Your
costs.
clients or?
Yep. We've seen the rise in rooming house developments as well. The return is expected to be pretty good. Really, I think it's just the resources. And unfortunately, the investors are taking over the market at the moment more so than the first home buyers, which they are getting pushed out. If you have the ability to invest, you have the ability to make profit. But I think it really comes down to planning. People who plan well really come out on top.
Amen to that.
That's a really good conversation, Julian. I think, look, I always like talking about the property. And I think this was a great start for what we're doing. I love talking about property. I love talking about finance. I love talking about whiskey. I think next time we do, probably we talk about something else we have, we love.
Sure. And just for, if you guys are watching, for all the people who are watching, I'm not really a whiskey guy at all. So I only drink whatever Sam brings. But otherwise, yeah, Yamazaki's super smooth. Next time, Sam, if you want to bring me on again, maybe we can talk about watches. Maybe we can talk about cars.
We can definitely talk about watches.
We'll be here longer, probably.
Yeah. I don't know what message that'll send out, but we can try.
Yeah.
We can try. Julian, thank you very much for your time.
Well, thank you for having me.
It's always a pleasure to talk to you about properties and everything.
Likewise.
All the best.
Thank you very much.
Right, cheers. Thanks, guys, for watching. If you have any questions in investing in rooming houses or want to learn more about how rooming houses works, Julian at RoomingKos will have the names and contact details on the slide. And if you have any questions about finance and general property market, feel free to get in touch with me. Thank you.
Thank you.